Intel, a titan in the semiconductor industry, finds itself at a critical juncture as of April 8, 2024. Its stock price, currently standing at approximately $38 per share, reflects a market capitalization of $165 billion. However, Intel's recent financial performance, characterized by a 37% decline in adjusted earnings per share for fiscal year 2023 to $1.05, signals challenges ahead. One of the most glaring issues facing Intel is its lagging stock performance compared to other leading chip stocks. While the SOX ETF has surged nearly 16% year-to-date and a whopping 60% in the last trailing 12 months, Intel has experienced a starkly contrasting 20% decline year-to-date, with only a modest 20% increase in the last trailing 12 months. This underperformance underscores investor concerns regarding Intel's ability to compete effectively in the semiconductor market. To address these challenges, Intel has embarked on a strategic shift, bifurcating its business into two entities: Intel Products and Intel Foundry Services. The former will focus on fabless chip design, while the latter will function as a chip fab and contract manufacturer. This move mirrors AMD's successful split into a fabless chip designer and Global Foundries, a third-party contract manufacturer. While this strategic shift holds promise for Intel's future competitiveness, it also poses significant financial risks, particularly evident in the Foundry Services segment. Intel's Foundry Services segment reported a staggering $7 billion loss in 2023, indicative of substantial financial hurdles. Moreover, the segment has consistently generated operating losses, even during the semiconductor industry's boom years. This persistent financial struggle raises doubts about Intel's ability to achieve profitability in its foundry operations and underscores the immense challenges inherent in competing with established players like TSMC. To bolster its manufacturing capabilities, Intel is making significant investments in semiconductor fabs, with each project requiring over $20 billion in investment. Securing funding from external sources, including government initiatives such as the CHIPS Act, and forging partnerships with entities like Brookfield Infrastructure are critical components of Intel's financing strategy for these projects. However, the scale of investment required poses significant financial risks, particularly if Intel fails to achieve anticipated returns on these investments. Market expectations for Intel's comeback were initially high, driving the stock price above $50 per share. However, following Intel's financial update and concerns regarding the company's ability to meet its targets, the stock experienced a sell-off. The current valuation of $38 per share reflects assumptions of 25% adjusted earnings per share growth for the next 2 years and a 6% terminal growth rate thereafter. This suggests that market sentiment has tempered considerably, with investors adopting a more cautious outlook on Intel's prospects. A key source of competition for Intel is TSMC, which currently leads in advanced chip manufacturing. TSMC boasts an operating profit margin exceeding 40%, setting a high standard for Intel to match. Given the formidable competitive landscape, doubts linger about Intel's capacity to achieve its target operating margin of 40% by 2030. The company's hybrid business model, combining fabless chip design with foundry services, may not yield the anticipated levels of profitability, further exacerbating investor uncertainty. In conclusion, while Intel's strategic shift and investments in manufacturing capabilities hold promise for the company's future competitiveness, significant challenges lie ahead. The financial struggles in the foundry services segment, coupled with intense competition from industry leaders like TSMC, underscore the complexity of Intel's turnaround efforts. Investors must carefully weigh the risks and uncertainties associated with Intel's transformation against potential returns, considering alternative investment avenues within the semiconductor industry. Please go ahead by liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.